Welcome to the Cash Flow Champs podcast, the show where we demystify real estate investing so you have the tools you need to gain financial freedom through passive investments in real estate. And now your host, Cash Flow Champs Managing Partner, Prashant Kumar.
Hi, this is Prashant Kumar from Cash Flow Champs. Along with me here, I have Paul Senior, my partner, and Gary Lipsky, the president and founder of Break of Day Capital. Gary has been out there in the industry. I have tracked Gary for a long time. He has been a lifelong entrepreneur. He has the company, which has 1.4 billion, not 1.4, quarter billion dollar in real estate transactions, and, basically they focus primarily on value and multifamily projects in Arizona, typically, although Gary lives in LA. I thought he lives in Tucson, but never mind. He's an author of Amazon bestseller books, best in class. He's host of, real estate asset management podcast, and he's co-founder of Asset Management Summit. Gary, thank you so much for your time this morning. Welcome to our show.
Thanks for having me.
Gary, the purpose of the podcast, as I was saying, is to motivate busy professionals to take their, capital that they have earned and make the capital work for them while they are working in their busy jobs. But today we are going to keep it open because I know you are primarily a strong asset manager and you have asset management podcast. We would like to hear your journey from horse's mouth. How has it been for you in the last couple of years, and how do you see going forward? So let's start with the past, and then we'll get into future.
Yeah, absolutely. Starting out in the industry, you're in the beginning. You're starting off small. You're gaining confidence. Real estate is a team sport, so surrounding yourself with others, you have a strong team yourself, and so it just helps being able to bounce ideas off of others. And when you're just starting out, hey, are you seeing the same thing as me? I mean, here you're taking money from investors, $1 million, $2 million, more, even and more. You want to make sure you're doing the right thing. And so having a strong team, real estate as a team sport, is so important. And being in a learning mindset, a constant improvement mindset. And I took that from day one. And that was one of the reasons I started my own podcast too. So I can ask really strong operators some of the things that I might not have known or wanted to know more of. And that's really helped rocket fuel my learning curve, and very active in conferences and reading articles, and always just trying to stay on top of the industry, because like anything else, it's ever changing. You're either getting better or you're getting worse. And so if you're a passive investor, you want to invest with people that are really investing in themselves, because things are ever changing, and you want to stay on top of the latest trends and on the economy and the markets and all these factors that make a really good investment. If you invest in the right place at the right time, it really provides tremendous tailwinds. It makes a bad deal good, a good deal great, and that's part of what asset management is taking advantage of putting all these different things in place to give you the best chance for success.
So, Gary, I find that kind of interesting because, most people enter in the space of multifamily syndication in general. You always hear people gravitate to, okay, I want to be the acquisition guy. I want to deal with the broker. I want to deal, with underwriting, whatever, investor relations. But asset management, you don't hear too much about, okay, I want to be an asset manager necessarily, right? So what was appealing to you there? What kind of why did you kind of gravitate to that space in terms of asset management over all the other options?
So that was strengths perspective. I've been an entrepreneur my whole life, as Prashant said earlier, and so I knew how to run businesses. I knew how to work with people, deal with money, work through problems, because nothing ever goes smoothly. So it was my strength, and so I didn't necessarily do it in multifamily. I did some single family and whatnot, but I applied those same skill sets, being proactive, over communicating, making sure everyone's on the same page, basic stuff, tracking everything, and having the KPIs, and that minimize mistakes and maximize, potential. So I was just going on strengths perspective, and there's so much talk out there, like you said, about how to get your first deal, but no one really talks about, okay, once you get that deal, how do you manage it correctly? So, I wanted to kind of talk about that as a way to, this is super, super important. And so I wanted to start that conversation going.
That's pretty actually. I mean, Gary just said it right. I mean, everyone wants to get in a deal, and the way I say it, you want to have a baby, it's like you have had a baby. Everybody's eager towards having a baby, but the work really starts when you have the baby, right? That's when the work starts. So very well said. Take us deeper into your asset management practices. What are your philosophy? How do you manage your teams? You are sitting in LA, your properties are in Arizona. How do you do that?
Yeah. Well, first off, we have a weekly call every single week. I don't care if the property is performing spectacular. We still have that call, and it's on Zoom, so we could see each other. We go through the property team sends us a report, but we have a very specific report. It's all on one page on a Google Sheet. So every week we're adding to that Google Sheet, and we can look back and see trends. So whether it was a month ago, where did we stand with delinquency and occupancy at this time? 6 months ago, a year from now, we can constantly track all those important KPIs. We also have a project list too that we go over. And so it's the task, who's in charge of that task, our notes from it, when it's due. So each week when we go back to it, if you haven't done your task, you're going to look like a fool. You're not being accountable for your work, and it's all there. Anyone can access it anytime. So if you forget, hey, I don't care even if it's Monday morning before our call, and you see that, you're going to make sure it gets done before our call versus, oh, I forgot. So just easy things that help people help hold people accountable is really important. And I'm out because we're not looking to do deals all over the country. We're only picking up a couple cities. I'm out there all the time because I'm looking at my deals and I'm looking at other opportunities. And I also have 2 of my employees that live in Phoenix too, so they can get to something if need be. But talking to other operators, it seems like I visit my properties a lot more than they do, and I just want to keep an eye on the stuff. You never know. I want to go buy the property on a Friday afternoon. Is the staff there working hard? Is the property clean? Just little things that it's not to catch them doing something bad. I actually want to catch them doing something good, and then I could praise them for it, and then they're going to be more likely to really go that extra mile for us as well. And I think that's really important too. Is they're part of your team, and you don't want people just punching in and punching out as a 9-to-5 job. The ones that you can really build a relationship with and make them feel their decisions matter, their input matters, they're going to go that extra mile too, and have that kind of ownership thinking that you really want to inspire on your team.
What are the challenges that you have faced in your early part of your real estate investing journey, and take us through, how have you overcome them? And, what are the solutions that you are putting in place? I mean, do you still use, like questions like third-party property manager, or you have your own property management, tell us a little bit more about that, sir.
Yeah, I get, in the very beginning, obviously there's a confidence factor. Can you execute on this deal? And you walk the comps and whatnot. Once you start doing a couple deals in an area and you start seeing success, you feel a lot more confident in your underwriting, and you can really kind of rev things up. So, people want to go, from 0 to 100 right away, but take it slow, build your systems, because we didn't have any systems when we started. So we figured out, okay, well, how do we build the systems and how do we improve it? It's just because what got us from A to B, it wasn't going to take us to C, and so you're constantly tweaking and improving. So that was one of the things that we faced, and obviously raising capital. when you get started. I think on my first deal, I raised, I don't know, like 100,000, and then it was like a couple 100,000, and it was more and more, and feeling more comfortable in doing that and providing education to investors. I'm not trying to convince them to be part of the deal. If they understand what we're doing, and it's some of the best risk-adjusted returns out there, and that it is safe. Some people hear real estate, and if they're not in real estate, they get scared. So just educating people, and then they might come in on my second deal or my fourth deal or my sixth deal. But then once they're in, they're gonna stay in. They're gonna bring their friend in because they like what we do, and it just grows and grows and grows. And I'm a relatively impatient person, and but you just you're playing for the long haul, and just be patient and keep doing the work. Some great entrepreneurs talk about loving the process, not the result. And if you love the process, it'll pay off. This is a long game, and you could be incredibly successful, by just doing the work where a lot of people don't want to do the work.
So are you guys vertically integrated right now in terms of your operations?
We are not. That question comes up a lot, Paul.
Yeah.
We use a third-party property management company that's based in Tucson.
Okay.
All they do is Tucson. They've been in there, I think, over 30 years. We rely on their expertise in that market as far as vendors. They operate, they manage 45 properties, so they can give us a lot of information that even if we self-manage, we just wouldn't have that economies of scale. So I'd rather stay nimble and not worry about the HR nightmare of hiring all these people and being beholden to that city. It doesn't, property management, it's hard to get, a 10 out of 10. Maybe
Right.
you're happy with a 7, 7.5. Even if I had my own team, do I get to an 8 and 9? I don't know. But I know I could be a lot more nimble and focus on what we do best to get the most out of the asset by doing it this way.
Right. And so what you do is very crucial, right? Because being an asset manager, then, you probably can, see what the property management is doing. Of course, they probably send in reports and everything like that. So it's like when you think about it, it's a crucial it's a crucial area to be in, because the operations of the asset overall, you have a big say in terms of what's coming in from your property management company. Have you find that to be very effective in terms of helping you to kind of get your assets in the direction that you want them to go?
Yeah, absolutely. And part of it is, when we underwrite, we come up with a business plan, and then we make sure they're on the same page before we go under contract. We want to make sure, hey, are you seeing the same thing? Are we on the same page? Then once we get it under contract, we go over it again, because if they have to buy into it too. So we want their local expertise and say, yes, this can be done. This is what we recommend. We want them to even push back if they don't, no, we think your rents are too high, or it's going to cost more, whatever it is. We want them to push back. Certainly we're gonna be very conservative on numbers, but I don't want to work with a company that's just going to say yes all the time. I want them to push back and be a partner in this,
Awesome.
So Gary, basically, I know the market is tough right now. We want to hear from experienced folks like you. Where do you think that it is heading? Basically all this financial uncertainty. What are your thoughts, sir? How are you underwriting the deals? This is what we just want to hear. What is there in your mind?
So I'm very bullish. Right now, the better operators are going to be able to navigate these waters. For those that were super aggressive with floating debt are feeling the pinch right now. Do they have the cash reserves to cover that? Do they have their own financial reserves to help cover it, or are they going to their investors to do a capital call? And passive investors should invest with people that can take a punch and have taken a punch in the past. It's just playing for the long haul. We thought maybe we could bring some assets to the market maybe at the end of the year, but we'll probably push that back. We're not in any rush to sell any assets. We're going to wait for the opportune time. It will get frothy again. Maybe, we start picking up steam at the end of this year, and then maybe towards the end of 2024, but at the right time, that's when you sell, and you have long-term debt that you can cover the debt service and hopefully have some good cash flow. And we are executing on our business plan. We're not going to hold back and not do the renovations. We want to be in prime position when it comes time to sell. We want to have that maximum NOI, and it's not our cash reserves anyway that we're spending the CapEx on. It's with the bank. So it's spend it or lose it. It's not like it's extra reserves for us. So we want to keep executing on our business plan and keep pushing on occupancy, keep pushing on rents, on other income items that you can push on, and keep operating the property.
How do you see new acquisitions, with the debt, the financing that is happening, rates are continuing to rise up, even though, we saw some mails from CBRE a couple of days ago. The Fed raised the rate, but CBRE decreased their Freddie SBL rates, because the volume is so low, everybody's sitting on the sideline. What are your thoughts there, Gary?
Yeah, so debt is actually cheaper now than it was a few months ago, even with the Fed, raising the rates. So now you're looking at, maybe 5.5% for fixed rate debt. So you just underwrite, you just build it into your model. You be conservative, you have a higher cap rate than you did, 6 months ago, a year ago, because, when you sell it, there will probably be cap rate compression, and I'm pretty confident of that, but from where we are now. But just because you're confident doesn't mean, you want to protect your investors and whatnot. Rather be safe. I mean, we've had deals where we had exit cap at 5.7 and sold it for like 3.7, and those are the deals that you love, so just protect yourself, protect your investors. You're only as good as your last investment, your last deal. So we're always under the quality is much more important than quantity. You'll do very, very well if you just focus on good deals, and don't any deal that you're starting to stretch. It's just not worth it. Make sure you have plenty of reserves and plenty of buffers in there. You'll even if you're only doing a couple deals a year, you'll be fine. So don't push your luck, and play the long game.
Are you guys actively looking right now, or you guys are on the sideline right now based on the condition of the market? I mean, interest rate 5.5, whatever. I don't know, but certainly, you're probably not getting as much leverage with Fannie Mae and Freddie Mac, the agency debt, that type of stuff. So, what are you guys doing now? Are you active?
Yeah, we are looking for deals. We've underwriting a bunch. There's not much out there, and typically we're 10 to 20% off from what the seller wants. And so, but with the higher cap rate right now, you are getting a little bit more leverage than you were a few months ago, and more lenders will be coming back online too, that kind of put their pencils down at the end of the year. We were just at NMHC, the multifamily housing conference in Vegas, and
Right.
Pretty much every broker says I have like one deal coming out. There was one that we met that had a few deals coming out, but it'll be slow. First quarter, second quarter, start picking up steam. But we'll stick to our guns, and we'll tell brokers this is where our number is at, and I know it's a few million off from where you are. If the seller is interested, great. If not, then so be it. I mean, we've waited a year for a deal at the beginning of COVID. Not that we weren't going after deals, but we just thought there was a different price we were willing to pay, and so we'll just stick to our guns and just wait till someone meets us at the price we're willing to pay.
Most of your deals are in Phoenix or Tucson market. I mean, have you thought of going into other markets, or you just want to focus in these markets?
Yeah, we've been looking in Vegas and Albuquerque for the last year, building up data points. Whatever market we choose, we want to be experts in that market. We can't be experts in all the different markets and chase deals everywhere. We want to build relationships and really understand and have data points. So when let's say a deal comes out and that's 30 million, maybe 150 units, we have all the data, to compare if that's a good or a bad deal. And that's certainly, we underwrite it, we stress test it, but we like, there's all areas that are all close to each other that we can easily get to. There are plenty of markets that I like, Florida or whatnot, but it's just too far away for us to be on a consistent basis. So we're going to be focused on the markets that we can consistently get to and really know well. That's important to us.
Gary, we've been hearing from some operators that they're having a little more difficult time kind of raising common equity these days. I mean, what's your experience there? Are your investors still in? I mean, oversubscribing for you, or where do you stand in terms of raising equity these days for your deals?
Absolutely. I think we kind of hit a wall. So we did four deals last year, and I know early spring, I guess we kind of hit a wall raising capital. So before we'd have a webinar, fill up that night. Now it just takes a little bit longer to fill up. We did 132 million in transactions last year, and so it's just being patient. Like, we know we can get there and have a backstop that I was able to cover, and every deal we closed and got raised. It just takes longer these days. People are nervous. They hear the news and they get worried, and when you lose a lot of money in the stock market, you are afraid to invest anywhere. So just be patient. Don't bite off more than you can chew. Make sure you have a good team around you. I'd rather take a little less and make sure I have partners that can help me get there versus having to stress and about raising the capital. It's not a good place to be. So better to think maybe a little bit smaller during these times, and when sentiment picks up, then you can go a little bit bigger and bite off a little bit more.
So do you go across different class? Like, I mean, you do value add in terms of maybe C property, or you mostly focus on, say, A class asset? And if so, which one you find out that you have easier raises on these days, Gary?
We do B and C class. It's funny. I think my investors really love the big value add. We bought a property that was, I would say, like a B plus, and that took a little bit longer because it did just good returns. 15% projected IRR. That property is performing fantastic, but some of my investors wanted the older vintage properties that had a bigger IRR, projected IRR, and but we'd rather be. We've done some older properties, 70s, even 60s, but we'd rather be 80s or newer. And I always say that, and then we find a deal that we really like in the 70s that has such a great value because people are falling asleep on it. And we feel like, hey, we could push rents, $300-400 just up to market with just doing some paint and some small things. So we're value buyers. We'll look to see where there's the most value, and then try to take it down.
A lot of operators, our goal is to be able to get repeat investors, right? I mean, investor invest with you year after year and over again. If there was one thing you could point to why you've had investor retention, investor who comes to you over and over again, what would that be?
Well, I guess one, finding good deals, and two, communication. We'll give them, how we're performing from actual to pro forma, things that we're struggling on and how we're fixing it, because nothing goes perfect. So we're transparent. There's ebbs and flows. There's sometimes we could be killing it on a deal, and then we hit a rough patch, whether turnover or something, and we explain that, and then we're back, up, kicking butt again. So Making sure they have all the information. We respond quickly to investors. That's really key. If they know that they're getting heard and getting responded to, that's a big thing. An investor is giving you 50,000, 100,000, 150. They want to make sure like you haven't, gone to another country and taken their money. So having that communication is so key.
Like everybody else, we have good moments and the bad moments. Share anything, good or bad, the best moments in your journey so far and the worst moment, if you would like, sir.
And sometimes it could be the same deal. It could be a struggle. One of the deals we used pref debt for the first time, and they don't sign the documents till like the day before you close, which is really stressful. And then that deal, we were killing it on the rents, and but at the same time we had some drugs on the site, some guns on the site, and then we had turnover on that same site too. Staff turnover, where they did a great job, and then eventually they kind of got burnt out by dealing with some of that on the staff. So we were kicking butt, and then we dipped a while, and then we also pivoted on our business plan. We didn't expect to paint it, but because we were thinking, because we were doing so well on the NOI, let's pivot on our business plan. Let's prepare it for a sale. And we get to a sale, and everything starts breaking down. When you're under escrow, it always happens. And then the buyer, it was super finicky about everything. This is when the tide started to turn. But that ended up being a tremendous deal for our investors. We sold it for much higher than our projection in under 20 months than we projected for 5 years. So sometimes the best deal you can have plenty of struggles on, but you keep solving problems, you keep being proactive, and you keep pushing through, and you get, you'll typically get really good results. You could, like I said, really good asset management, if you're on top of it, could take a bad deal good, a good deal great. And if you have tailwinds behind you, then it could be a grand slam. So keep doing the work, keep fighting through, and over the long haul, real estate will usually pay off well.
That's super awesome. Today we are listening to Gary Lipsky. He's the founder and the president, of a big real estate company, and personally, I have followed Gary for a long time. Gary has written books. He's a podcast owner, and he has done real estate summits also. So Gary, so glad to have you here, sir, today with us. We are jumping into the lightning round right now. We'll ask you a few questions very quickly. Share one personal habit that contributes to your success and that you think will benefit our busy professionals.
Taking care of your health is the most important thing. If you have good health, then everything else will fall in line. If you don't have good health, then you can't work, you can't think straight. So exercising, eating right, for the most part, will take you a long way.
What I know you've been around, so you probably have gotten mentors or somebody speak into your life. I mean, throughout your process, throughout your journey. From those advice you gotten, what is one of the best pieces of advice you've received from someone, and how you think it may be able to help others who are trying to pursue the same path that you've gone down?
Well, I think it is exactly what you said, having mentors and being involved in a group. I think that's the best advice you can get, because you could share struggles, wins, whatever, bounce things and hear what other people are facing. That you might get an idea, you might get something you need to check in your loan docs, whatever it may be. That stuff is priceless. So have a mentor or several, and be a part of real estate groups. That will help give you momentum in your work too. And when you're feeling lonely and working, home sometimes, and not having to, you're kind of on your own in your own little island, that is so powerful.
Sweet. And let me just ask you this real quick. I don't know if you're a big reader or literature, whatever, but is there a book that you would recommend for folks to pick up if they want to kind of learn this business of, say, syndication real estate investing in general that will get them on their way?
Yeah, I think if you're a true beginner and you want to learn about syndication, I think Joe Fairless's Best Ever book is a really good, because it covers everything. Depending upon what you want to do, there's other books out there, but yes, I think being a ferocious reader really helps. There's a lot of great free content out there. Having this podcast or or listening to others. I mean, there's just so much free information out there, or relatively inexpensive, that there's no excuse for anyone to say, I don't have any money, to be able to learn a lot.
How can our listeners reach to you, Gary? How can they connect with you?
Yeah, my website, breakofdaycapital.com, is the best place to reach us. There's a contact page. You can get our Real Estate Investing Made Easy ebook that we have there, and there'll be links to all of our other materials. So check us out on our website. Also, we're on social media, Facebook, Instagram, LinkedIn. So feel free to connect.
Gary, once again, thank you so much. This is, Friday morning, 9 o'clock your time, and you got up and, gave us your time. For our listeners, I'm pretty sure, small nuggets that you gave, hopefully they would be helpful for our listeners. Thank you so much, Gary, again.
Prashant, Paul, thank you for having me, and, love what you guys are doing.
Appreciate you, Gary. Thanks so much. Have a great day.
Thank you for tuning in to this week's episode of the Cash Flow Champs podcast. Cash Flow Champs partners with busy working professionals and entrepreneurs that want to build and maintain generational wealth through real estate. Visit cashflowchamps.com to learn more about us